Mohit Gulati, the CIO and Managing Partner at ITI Growth Opportunities Fund, is with us to talk to us about just that. Mohit, hi, good to be speaking with you. Well, what a stupendous year it has been, 2024 with respect to IPOs and the kind of fundraise that have happened, whether with respect to QIPs, etc. as well. Do you expect this kind of momentum to really sustain into 2025 as well?
I think, India is an elephant which has now started roaring across the fields. So my sense is we are going to see this momentum continue into 2025. Of course, I think the start of the year is going to be a little slow, given the fact that we have a lot of geopolitical things happening. But my sense is the momentum will continue. We look at about 2.1 lakh crore of fresh issues coming in the next year. And that's what the pipeline is looking like.
The IPOs this year have been good. They've been successful, but now going forward, things will change. SEBI says higher scrutiny for SME IPOs. Also, there is a base effect which wouldn't kick in. So for 2025, where do you think the trend would move? Where do you think the puck would move?
I think, Nikunj, you and I discussed about the SME IPOs a couple of months ago, right? There is clearly a problem at hand in that segment. It's more like a gambling den than an IPO ring. It's unfortunate that a lot of good quality SMEs will get left out because of a lot of regulatory clampdown that should ideally come in. But I think the momentum on larger issues will continue. Of course, valuations will, in my opinion, take a little bit of a beating because the sentiment's not all that upbeat as what it was, say, in 2024. We had a host of events which made that sentiment positive. But my sense is, despite the base effect, we should around about match the same numbers, if not go higher by a few percentage points.
The IPO market has also given, I'm talking about IPOs, that it has also led to some interesting businesses. A lot of businesses have now come where you can actually invest in. Suddenly last 2 years, which you always thought, oh, wish these companies were public. Anything exciting which you think has happened in the IPO market where it has created new businesses and which you think as a fund has come on your radar?
I think, constantly, at least on the primary side, we are looking at a part of our job is, on venture capital to keep looking at new age businesses to imagine into the future. So we do that quite a bit. I think the secondary market only values it and appreciates it at a much later date. The pipeline that is getting created on the primary side, with regards to new age businesses that are getting listed. I mean, look at what Zomato and Swiggy have done, right? Essentially, those two businesses, besides just sort of food delivery, they are now, getting pure play retail valuations. A DMart will probably lose PE ratio just because of these two guys. So we will keep seeing disruptors like these, which will keep coming in, sort of itching on the incumbents. D2C is a space which is absolutely giving a run for its money to the larger FMCG players, and you're seeing where volumes drop and you're seeing value drop on some of the larger names. So my sense is this particular trend shift, right? Because we are a very young country, our consumption patterns have fundamentally shifted a lot over the last 5-7 years, and they'll continue changing. Right, by 2030, the face of how India's Nifty 50 looks like will be very, very different. The constitution will change. If you're an old school business, unwilling to innovate, unwilling to adopt technology, to go to your consumer in a different manner, there's a very high chance you will become obsolete in the decade up ahead.
Mohit, 2024 was also marked by a new trend in terms of IPOs. There's a lot of MNCs coming to India and trying to unlock value, given the fact that obviously the multiples here were a lot more lucrative. Do you expect that also to sustain as we get into the next year?
I think that's a nice pure play arbitrage, right? And I know some of the names that you're indicating at, if the parent entities are trading in their home countries at say 10, 12, 15 times earnings, and India's subsidiaries are trading at 50, 60 times, it makes sense for them to sort of offload, right? It's just, kudos to the CFOs in those organizations to exploit that very nice little arbitrage opportunity. My sense is that there will be a shrinkage in terms of the PE multiples that global businesses and India businesses will trade at. So you may not get as many large stock opportunities as what you got at, say, a Whirlpool or a LG or Hyundai for that matter.
Okay, so there might be a bit of a shrinkage there, but what about the value unlocking? Because next year, perhaps a lot is expected, whether it is, HDFC Bank or a lot of other financials or other companies as well, which are looking at perhaps getting one of their units listed. Is that something which is likely to pick up materially as we head into the next year?
No, I think, the trend that we're seeing is 2025 is going to be all about mergers, demergers, value unlocking of subsidiaries. It'll start on 1st of January with ITC shredding off its hotels business. Vedanta will do a massive 6-way or a 5-way split. So I think, clearly all the large conglomerates are realizing that also, a couple of trends here, right? One is you incubated businesses within your larger subset. And what happened is, now with time, all of those businesses have actually gotten mature enough to run on their own. So now it makes sense for that value unlocking to get done. Markets have been bullish. People are valuing the fact that, a subsidiary company of XYZ large conglomerate has its own standing. So it makes absolute financial prudence to make sure that, more of these value unlocking events happen.
Okay. The IPO market is always considered to be a harbinger of when there's excitement in the IPO market, that is end of the market, at least the bull run. Is it different this time?
I think the problem, right, is India doesn't know what else to do with its capital. So the equity markets are the only place where everyone's sort of jumping in. The IPO markets, of course, have been the biggest beneficiary of that. Unless we don't find, through the channel, I would like to urge to the government to try and find ways to get the Indian investor or get the retail investor to do a lot more than just move to the financial markets, right? I think we have prohibitively high GST numbers and we have just consumption's paused. Until we don't restart consumption, you'll keep seeing these massive numbers coming to the IPO market because people don't know what else to do with their money.
I would assume that, financialization of savings is ultimately better for economy and not just splurging it away. But yes, I understand that a good mix is what is really needed for a healthy economy. That point is taken, Mohit. On that note, we'll let you go. Thanks so much for making time and speaking with us today. So that's the view coming in.
Thank you so much.
Valuations is something which is expected to get a lot more reasonable next year. Value unlocking, mergers, demergers, restructuring is going to be the name of the game. Even though the opportunities of MNC getting listed in India might be selective and case basis, we'll watch out for all of that.
If you like this video, then like, share and subscribe to ET Now.